A metal ETF portfolio can be built using several types of exchange-traded funds, ETFs, that focus on the metals and mining industry, specific base or precious metals, or green, strategic metals. These ETFs offer exposure to commodity-linked industries, which are sensitive to global supply and demand changes. Diversified metals and mining ETFs. These funds provide broad exposure to a wide range of metal and mining companies, rather than specific physical commodities. 1. SPDR S&P Metals and Mining ETF, XME. This is one of the largest ETFs in the space by assets under management, AUM, and provides broad exposure to the US metals and mining industry. Its holdings are diversified across different types of companies, including those involved with steel and coal. 2. iShares MSCI Global Metals and Mining Producers ETF, PIC. This ETF offers global exposure to metal and mining producers, with holdings in a large number of international companies. And 3. VanEck Green Metals ETF, GMET. This fund focuses on companies involved in the production of green metals, crucial for the energy transition, such as copper and lithium. Specialized and specific metal ETFs. For investors seeking targeted exposure to specific metals or types of miners, the following options are available. Precious metals, gold, silver. VanEck Gold Miners ETF, GDX, focuses on major gold mining companies globally. iShares Silver Trust, SLV, or ABRDN Physical Silver Shares ETF, SIVR, these funds aim to track the price of physical silver. Industrial and strategic metals. Global X Copper Miners ETF, COPX, targets companies that generate significant revenue from copper mining. VanEck Rare Earth and Strategic Metals ETF, REMX, invests in companies involved in producing, refining, and recycling rare earth and strategic metals. Invesco DB Base Metals Fund, DBB, a commodity fund that tracks an index composed of futures contracts on key industrial metals like aluminum, copper, and zinc. Portfolio considerations. 1. Risk. Metal ETFs are often cyclical and can be volatile due to sensitivity to global economic cycles and commodity price fluctuations. 2. Diversification. A diversified portfolio might combine exposure to different types of metals, e.g., a mix of precious, base, and strategic metals, using several specialized ETFs, or use a single broad-based ETF like XME or PIC. And 3. Physical versus producer ETFs. Some ETFs hold physical commodities, like physical gold or silver trusts, while others invest in the equity of mining companies. The performance drivers for each can differ. Before investing, thoroughly research each fund's specific holdings, expense ratios, and performance history on